Thank God it's Friday. Welcome to 55 minutes of fresh conversations and stories from the world of business. And it's happening here on Business Morning on Channels Television. I'm Ini John McQuarrie. Let's start with the stories. Oil prices slipped today, but remain within touching distance of 3-month highs as fears over new COVID-19 lockdown measures in Shanghai outweighed solid demand for fuels in the United States, which is the world's top consumer. Brent's crude futures for August were down 33 cents at $122 a barrel after dropping to as low as $121.60 earlier in the session and declining 0.4% on the previous day. U.S. West Texas Intermediate crude for July fell 29 cents to $121.22 a barrel, having dropped 0.5% yesterday. Shanghai and Beijing went back on a fresh COVID alert. Parts of Shanghai imposed new lockdown restrictions, and the city announced a round of mass testing for millions of residents. China's crude oil imports in May were up nearly 12% on a year earlier when they were low, but refiners are still battling with high inventories with COVID-19 lockdowns and a slowing economy weighing on fuel demand last month. Meanwhile, peak summer fuel demand in the United States continues to boost crude prices. Here in Nigeria, the Nigerian Export Promotion Council, NEPC, says it firmly believes that Nigeria's survival as a country depends on non-oil exports. The executive director of NEPC, Mr. Ezra Yakusak, made this known at a program organized to sensitize stakeholders on export trade houses. Mr. Yakusak stresses that maximum use of the export trade houses will not only help to improve quality and quantity of made in Nigeria products, but would lead to improved foreign exchange earnings into the economy.
Well, NEPC has taken a proactive measure to ensure that some of these products are removed from EU restricted lists. And because we realize that some of these products, the restriction is placed based on sometimes poor packaging and lack of mandatory or voluntary certifications. And so we decided to take the gauntlet, to take the challenge, and we invited some certifying bodies all over the world, and they've certified some of our products, and NEPC paid for it under the program called Go Global Gold Certification. And we've so far facilitated the certification of about 150 SMEs now, free of charge. NEPC paid for it. And we want to see how Nigeria will do everything for Nigerian products. Ensure that they are removed from such restricted lists.
To other developments now, the record of the Debt Management Office shows that Nigeria's total public debt stock increased to 41.6 trillion naira in the first quarter of 2022, and that went from 39.56 trillion naira in December 2021. It's an increase of 2.04 trillion naira within a period of 3 months. The public debt stock covers the total domestic and external debt of the federal government and state governments, as well as the Federal Capital Territory. Now, according to the DMO, the total public debt stock includes new domestic borrowing by the FGN to partially finance the deficit in the 2022 Appropriation Act. The $1.25 billion Eurobond issued in March 2022, as well as disbursement by multilateral and bilateral lenders. Well, we've had this conversation so many times, but there are new developments, so we're back at it again. And this time we're having this conversation with Dr. Omobola Adu, investment research analyst with AfriInvest, joining us from Ikoyi here in Lagos. Hi, Omobola, good morning.
Yeah, good morning, Ini. How are you doing?
Great, great. So apart from this, I think one of the latest information in this area has been the suspension of the Eurobond sale that the federal government just did. Did that come out as good news, or is it just postponing the evil day?
Well, yeah, so this postponing of the about 915 million worth of Eurobonds that the federal government planned to raise within May to June is largely because of the current geopolitical situations that we are experiencing right now. If you recall, as at March, they raised around $1.3 billion in Eurobonds, priced around 8.4%. Since then, if you look at what has happened in the geopolitical space, the tension between Russia and Ukraine, we look at how central banks, global central banks have been hiking interest rates. We have a situation where the global economic environment is not that favorable to be issuing, particularly foreign bonds. When you take into consideration, right, that in terms of repayment, we have to repay these things in dollars, and you look at where interest rates are going, it means that our average cost of borrowing will be going up if we decide to explore the Eurobonds market as at this time. In terms of possibilities for what we are likely to see, I think the DMO already mentioned that they will be exploring withdrawing some of the rights with IMF in order to bridge the gap in the gap to fund the 2022 budget. So we're having a situation where I think the Ministry of Finance have come to the realization that our cost of borrowing is too large. If you look at in terms of our debt service to revenue, as at 2020, it was around 83%. IMF says that by 2026, we could be approaching 100%. So taking all these factors into consideration, borrowing at this present time, especially in the international markets, may not be the best may not be the best position for the DMO and for the government. So we should expect them to do more of domestic borrowing while also drawing down on some of the rights with IMF.
Yeah, okay, because I was going to ask, obviously we'll still have to borrow because we have the deficits of the budget to fund. Will it be more beneficial to local investors, or will it help the economy better, or will it soften, you know, the issues surrounding the debts and debt servicing if this money is sourced locally?
Yes. So sourcing locally, in one, it's good for the federal government in terms that you don't need to start to look for dollars to fund repayment, things around repayment. So sourcing domestically gives you the leeway in terms of how you can repay the debt because you are repaying with the naira, right? In terms of it being beneficial to investors, yes. So higher rates. If you look at within the last couple of months, the central bank moved to hike interest rates to 13%, and what we've seen in the fixed income market since then, Treasury bill rates have gone up by an average of 90 basis points thereabout to around 4.5%, especially for the 364-day Treasury bill. In the bond market, particularly at the mid to the longer end of the curve, we've also seen interest rates going up. We've also seen interest rates going up in the last couple of weeks. So we expect to see domestic investors taking advantage of this situation. In the last auction that the central bank did earlier last week, in terms of the 91-day and the 364-day, they were both oversubscribed by well over 4 times. So we're seeing domestic investors picking interest in the fixed income market, considering expectations around interest rates.
Yeah, well, if it does pay the economy, because local investors will, of course, boost their portfolio and it is cheaper for the government to repay, why does the government have to look outside for, you know, the dollar Eurobonds in the first place? What are the advantages?
Yes, so speaking to that, it has to do with our obligation, right? So we have naira obligations and we have dollar obligations. There's no way you can fund your dollar obligations with the naira. So that brings it to the sense that you need to have a good reserve of foreign currency. If we look at our external reserves over the last couple of months, despite increases in crude oil prices averaging around $100 to a barrel, our external reserves has been declining. We're seeing the situation, the deviations in the exchange rates markets within what we have in the I&E window to the parallel market. So this largely speaks to the situation where we have dollar shortages in the economy. And in order for you to shore up your dollar reserves, you might have to look elsewhere, especially when in terms of export earnings in terms of dollars, this hasn't been at a good level. Recall that oil revenue takes up majority of our export earnings, and over the last couple of quarters, we've seen oil production level declining on a quarter-on-quarter basis. We're not anywhere close to our historic levels, around 2 to 2.5 million barrels per day in terms of production, due to things around bunkering, things that are curtailing our production levels. So you're having a situation where we are not earning as much dollar earnings as we used to earn, and therefore the government has to source for this dollar, we have to source for these dollars from elsewhere, and that brings into the situation where we need to visit the international markets to issue debt in order to raise our external reserves. If you recall, in March, as when we concluded the 1.25 Eurobond sales, our external reserves rose close to around $40 billion, but now is currently around the level of $38 to $39 million in terms of external reserves.
Okay, still looking at the domestic scene now, the hike in interest rates to 13% from 11.5%, have we started seeing the impacts?
Well, yes. So like I said, we've started seeing the impacts, especially in the fixed income market. If you recall, I mentioned earlier that rates on treasury bills moved up to the last auction across all instruments. That's the 91-day, the 182-day, and the 364-day treasury bills. In the bond market, in the last auction they did, interest rates also edged upward. So we are beginning to see an adjustment in interest rates in accordance to the new monetary policy rate. If you also recall, as at last year, the central bank introduced a peg on the minimum savings deposit rate that commercial banks should offer at 10% of the MPR. So we expect to see, at the minimum, interest rates on savings deposit by commercial banks to move from the 1.15% we had earlier to around 1.3%. So interest rates in the markets are already adjusting to the new dynamics that we have in the economy as of today.
Yeah, one other thing that is relatively new in that space, the fixed income space, is the tax. Are investors reacting to that? It's not a discouraging factor.
Well, so from an investor's perspective, you have to look at it in terms of what are the alternatives that you have to invest in. The Nigerian financial market is not that deep compared to developed markets. So you have a situation where investors are constrained in order to either invest in fixed income securities or in the equity market. If we look at what the equity markets have been doing over the last couple of months, up around 23%, largely driven by some of the bellwether stocks. But if you look at it in terms of the overall broad performance, not all stocks are doing great. So it comes back to fixed income, right? So like I said, if you can imagine on a one-year T-bill, as at last year, you were earning around 2%. Now you can get as much as 4.5%. So despite the tax element, it's still a good investment to make on when you look at it on an average basis and you average out your cost of funding. So we should still expect to see investors to play around in the fixed income market despite the tax element that the federal government recently introduced.
All right, so how does all of this fit into the DMO strategy, which is to increase that threshold from 25% to 40%? Does this imply that the government still has more room to borrow without us being worried?
Yeah, so in terms of this indicator, right, when we look at the debt to GDP ratio, it basically speaks to solvency. But if the main issue always has to do with revenue, so your GDP doesn't pay back debt; it's your revenue that are going to use to pay back debt, right? So we currently have our debt to GDP ratio around 24%. But if you look at it in terms of debt to revenue ratio, debt service to revenue ratio rather, is currently around 97% if you factor out grants and aids that the governments received within the last year. So at that point, it doesn't really speak room that we have more leeway to borrow. In fact, a rough estimate shows that for us to maintain a debt to GDP ratio of around 40%, we'll need our revenues to be hitting close to 7 to 8 trillion naira. Over the last 5-6 years, the best we've done in revenue is around 5.9 trillion. The government has a historical record of underperforming in terms of revenue, but always meeting their expenditure. So this, in terms of GDP, yes, it says that we have more room to borrow, but we have to look at it prudentially in terms of our revenue. Revenue is what we're going to use to pay back our debt. And based on revenue, having a debt service to revenue ratio of around 83-90% on the average doesn't speak well that we have so much room to borrow considering our revenue challenges. So it then boils down to, how can we reduce some of our expenditure line items in order to accommodate maybe more debts, that especially if these debts are channeled into economic generating activities that will be beneficial to the economy.
I guess the other side of that conversation will be, how can we increase our revenue so that even if we have to borrow, then our revenue will still be able to accommodate, servicing of the debt?
Yes, exactly right. If you look at our revenue breakdown, for a long time we have been largely dependent on revenue from oil. But what we are seeing in the last couple of years, but we are seeing an increasing proportion in the non-oil segment. So we've seen the Finance Act with government raising taxes on a number of items, adjusting the tax revenue base. So I think we're at the point and we're at the realization that we need to shore up our revenue. We need to look for ways to boost our revenues. But in terms of taxes and looking at where the economy is, we have to strike the right balance. Within the last 6 years, we've experienced 2 economic recessions. The economy is still very fragile. So trying to boost revenue or the non-oil revenue from the tax element might create more burden on individuals and companies. So at the end of the day, the government has to be more strategic in ways to boost revenue. But most especially, we have to look at ways in which we can prune down our expenditures.
All right, Dr. Mobola Adu, investment research analyst with AfroInvest. Thank you so much for sharing your perspective with us this morning. We do hope that one way or the other, these talks will help both to boost revenue and to cut down on expenses. Thank you so much and enjoy the rest of your day. As the world rebuilds and reinvents, there's a historic investment in infrastructure improvement projects, healthcare, climate change, fintech, mobility, digital transformation, renewable energy projects, a whole lot. Well, a closer look here reveals an economy in carrying out all of these projects, although today is threatened by a lot of uncertainties. In Nigeria, we have insecurity as a major threat to that. Globally, even in Nigeria, so we do have the war in Ukraine. And then we have in places like Asia, the new lockdowns following COVID-19 pandemic. But let's take a closer look at the opportunities in these areas and the challenges, of course, with a business development leader at Project Management Institute, PMI Africa, George Asamani, joining us from the UK. Hi, George. Good morning.
Good morning, and good morning to the viewers. How are you?
I'm good, good to have you on the show. So, yes, a lot of activities. Even in our last conversation, we talk about government borrowing in Nigeria, and these is supposed to feed into infrastructure projects, you know. But sometimes it seems we overlook that that's an economy. How big, at least let's focus on Nigeria, how big is that economy, the project management economy?
You know, it's a multi-billion-dollar economy. If you think about it, project management is everywhere, right? So everywhere, in every industry, there's project management happening. So essentially, it's a sum of the multiple economies around the world. And when we say the project economy, what we mean is essentially the world where things are being done in a project-like fashion. So it's not necessarily just within the profession of project management, but it's also people whose job title is not project manager, but they're doing project type work. So for example, finance people who are implementing a new finance system, they have to get involved in project management. Obviously, civil engineers, they do project management. Someone who's doing, launching a new movie or creating a new movie, there's project management in there. So across multiple industries, there's project management involved. So it's huge. It's absolutely huge.
Yeah, but how conscious is the world about this economy? Because we do know that every year, for instance, there are some funds budgeted for infrastructure. In the private sector, I mean, it's a whole lot. You just mentioned, made an example of the creatives. Now, how conscious are people that really this is an economy that should be given intentional approach and strategy in order to optimize the potentials, you know, in that economy?
That's a great question. And I think, to be honest, many people think of project management as a skill within engineering or within construction. Many people do not think about it as a skill that is part of life in your everyday, in every sector. So I think that's a great question. And you talked about the funding that is put towards, for example, infrastructure projects or development projects. If you think about it, one of the largest streams of funds coming into Africa is for development projects. And the word there is project, right? So it just shows how critical project management is.
Yeah, and then the other side of that would be the skills acquisition, because if it's an economy, then you do need skills and personnel to manage it properly. Where on the top of the list of priority is that?
It's definitely a top 5 priority. You know, if you look at, for example, McKinsey's report on what are the top 5 skills that companies who are moving into the future, you know, project management is there. If you look at, you know, some of the leading African research organizations that look at for the future of Africa, what are the top 5 skills? Project management is there. So certainly in everyone's list of top 5 skills to have, whether you're a project manager or not, you should definitely be upskilling yourself from a project management perspective. Upskilling yourself could mean a number of things. It could mean you're actually looking for certification, going all the way to do, for example, the PMP, which is project management professional. You could go all the way from a certification perspective, or you could simply upskill yourself by getting some practice, getting involved in your with a local PMI chapter. For example, there's PMI Nigeria, so it's the chapter in Nigeria, Project Management Institute chapter. Get some practice there, join the community, and you know, you don't necessarily have to certify, but just building that muscle of project management, looking at how do I think of scheduling, how do I think of risk management, how do I think of people management, what are my soft skills, what are my technical skills. All this is included in project management. And I mention this because actually, when people think of project management, they mostly think of scheduling management, but it's a lot more than scheduling management. It's also looking at, okay, what is the business case? What is my business acumen with respect to the work that I'm delivering? What's the business purpose for it? So it looks at outcomes as well as modes of delivery.
And what opportunities are there for Nigerian businesses when we're talking about project management?
I think that there are loads of opportunities actually, not only for businesses, but for also for individuals, right? So if we look at, first of all, individuals, we talked about the project economy. We said everything is a project, right? That means that for many individuals, as long as you have that project skill or project management capability, there's opportunity for employment. And so that's on the individual level. In fact, one of our job reports show that 45% of new jobs over the next 12 months will require the skill of project management. So that's the opportunity for individuals. For companies, I think the opportunity there is around making an impact, right? And what I mean by that is, if you look at the population of our continent, between now and 2050, we're going to develop the largest workforce in the world. What that means is that we have an opportunity to be companies and to create companies that are going to service not only Africa, but service the world. So there's an opportunity for organizations to harness this talent and be the ones that are driving the future of work, right? So I think there's a huge opportunity there for organizations. Think about India and IT, what we call the global delivery model. In the 80s, you had several companies in India who thought, hey, we're actually pretty good at this software development. Why don't we start building it cheaper for companies in the States and companies in the US, right? That's the beginning and the invention of what we call the global delivery model, essentially build it cheap in India. And I think Africa has a similar opportunity in terms of just pure thinking, pure talent within our continent to be able to deliver that globally, especially in this world where we have remote working as an opportunity.
Unfortunately, mostly for Africa and Nigeria, we hear a lot of conversations about potentials which are not tapped, because if you talk about ICT, you talk about writing of programs, we do have the brains here, but it seems a lot of it is, just remains as potentials, and sometimes this can be really discouraging. Is this just about the environment or what?
No, that's a great question, actually, and it leads on nicely to one of the things that we're working on as PMI. We have joined the number of organizations who are trying to make an impact within our continent. There are local organizations and international organizations that are working together to try to address this, right? And one of the ways that PMI is helping to address this point about, I'm not a software developer, how can I make a difference, or how do I harness my potential? We are providing solutions that don't, for example, require you to know how to code to build technology. And this is the world of low code or no code technology. It basically means you don't need to be a software developer to be able to build an app. So there are these new kinds of technologies and new kinds of solutions that enable people to get involved and to make a difference and to use their potential or harness their potential without, for example, being a developer. And so there are several initiatives that are going on in this background because we realize the point that you just mentioned.
George, but, is it a business is slow to adopt, innovation? Are they reluctant?
I think it's more about the individuals in that business, just from my experience. And my response to that is always, you can either take the carrot approach or the stick approach, right? The carrot approach being, when we engage with organizations and get a sense of how innovative or not are they. The carrot approach is encouraging them to say, guys, look, you could become the next huge global tech company. For example, the largest companies in the world today are those that have innovated. Think of Tesla, think of Alphabet, think of Apple. It's simply where the world is going. So assuming you're existing as a business to be successful, then to be successful, you got to innovate, right? So that's the carrot approach. The stick approach, where it's rather about showing the negative side and using the stick. The old expression innovate or die, right? History shows that those organizations that don't adapt will struggle. It's simply the case. And in today's global world, where customers are exposed to the best of everything, if as an organization you're not striving to innovate and you're not striving to deliver the best or at least close to the best for your customers, you're likely to lose those customers to someone else who is actually trying. So yes, maybe it may not be easy for everybody to innovate, but innovation has to be on your agenda. If you, as a leader yourself, you struggle with it, that's fine. You can, somebody else in the organization can be responsible for it, or hire people who will be able to bring that innovation into your organization. Because we all know companies that existed in the 80s or 90s and don't exist now simply because they did not innovate. Meanwhile, they were household names. So innovation is critical, and I'll encourage all companies to do that.
Innovate or die. That's really scary, but I guess that's the reality. Just before we let you go, the issue of brain drain in Nigeria, how much of a factor, deterring factor, do you see that being in the nearest future for Nigeria?
Yeah, brain drain has been a huge issue for a long time, and I won't pretend to know all the answers for that. What I do know is that it's complex and it's affected Africa in a huge way. And I think it's not just companies that need to do something about it. The whole ecosystem needs to respond. So right from educational institutions need to play their part, governments need to play their part, and of course, organizations need to play their part. But personally, what I'm really excited about is that, as I alluded to earlier, we're entering an era where remote working is becoming the norm. So we're starting to see people actually who have secured great jobs overseas or in other African countries, but they're simply working remotely from the comfort of their own home in Nigeria. So what this does is that it helps to both retain the talent within the country, or at least prevent or slow down the brain drain, but whilst at the same time allowing individuals to take advantage of these growth opportunities in other countries. And this is part of the advantage I was talking about in terms of the growing workforce. So as long as this growing workforce is skilled, then we have the opportunity to do this global delivery model that I mentioned earlier on, and to be able to serve the globe from Africa.
All right, thank you so much, George Asamani, Development Leader at Project Management Institute, Africa. Thank you so much. We do hope that the message is just out there. This time it's not just about the government, it's also about individuals. Acquire that skill that you need to be functional and relevant tomorrow. Thank you so much. Enjoy the rest of your day.
Thank you. Appreciate it. You too. Thanks.
Let's move to the markets now and see how it ended yesterday. We start with the equities market. It was bearish yesterday, the second one for the week. The all-share index dipped by 4 basis points to 53,170. I do hope we will not lose out on that 53,000 level. The performance was largely driven by a drop in the banking sector. A lot of banking stocks dropped yesterday. Zenith, GT, Coal, they were all down. Incidentally, the activity chart was in the green there. Value was up about 76% thereabouts yesterday, and there in the sectors, more than 1% drop for the banking sector. Not very nice, just dragged the market down. Investors are really doing a lot of cherry picking in that sector at this time. Let's move over to the fixed income market now. We'll see that overnight lending rate contracted by 18 basis points to 6.5%. And that was despite funding pressures from the NCB issuances. The Treasury bills secondary market traded with mixed sentiment, albeit with bearish bars. And there you see the yield across the curve. The average yield contracted at the short end by 2 basis points following demand for 63-day treasury bills, and then expanded at the mid as participants sold off. Well, I think we have an analyst joining us, Jibola Ero Phillips, head of FX trading, FBN Quest Merchant Bank, joining us. Hi, Jibola, good morning.
Hi, good morning, Wills. How are you?
Well, it's Ini. I'm great. Well, is the market, I think we had an auction on Wednesday. How did that go?
That went, I mean, I caught it in line with market sentiment. Because the market was, prior to that, market was a bit liquid, and the rates had started to drop again in the secondary market. So that kind of played into the hands of the regulator. We saw a drop in the stop rate for the mid end of the curve. That's the 182-day and then the 1 year. Would I say market was surprised? Not so much, because the secondary market was beginning to trade around those levels. Stop rate for the 364 days fell to 6.4 from 6.49, while the 182 days fell to 3.84 from 3.89. So, and that's because there was a bit of liquidity in the system prior to the auction. So that's caused them a bit of bullish sentiment, if I may say. Although that most of it has gone away, but we can see that people are really ready to pick up yields at this kind of levels. That kind of dissipated into the bond market as well, where we saw a bit of bullish sentiment, a bit of buy pressure across the board at yesterday's close. Today, we're kind of quiet. Market's a bit flat. Not much is happening yet. We just a big pocket of buy pressure, but nothing to alarm the markets just yet.
Can we connect the suspension by the federal government, for the sale of the bonds overseas? Can we connect it to the activities we saw this week in the market?
Not exactly. Well, I mean, you may be onto something there in the sense that maybe there's a shift into the local bond market. But what was said was that it would make sense for them to raise euro bonds at this current level, just because of everything happening globally, inflation at almost at the record levels in some of the developed economies. So it really doesn't make any sense for anybody to raise euro bonds at this stage. So they might be augmenting that with the local bonds market, fixed income market. But I assume that at some point, when things calm down, maybe federal government will return back to the bond or euro bond market to see if they could raise funds at those levels.
And we see that I think investors have started reacting to the increase in the interest rates from the MPC.
Oh, certainly. All through that week, yields, spiked up, remarkably across both the T-bills and the bond market. I mean, that goes without saying. It gives the sentiment about what exactly is happening globally and then, of course, locally as well. So we saw at that time, once the NPR was raised, market just reacted almost instantly. Yields went up across the board. But a whole lot of it, I wouldn't say we're back to the pre-NPR levels, but I mean, there's been a bit of a bit of buy pressure, and that's just because there was a bit of liquidity the prior week. But of course, again, today's FX, we're probably going to see some bit of pressure because there's going to be a need to fund the FX auctions amongst the bank. So we might see a bit of very sentiment again today going into next week, Monday.
Okay, and what's your outlook from today, let's say for next week? Do you see major activities?
Today, I really don't think there'll be a whole lot because the liquidity will probably, go out for FX auction today. So I don't think that there'll be a lot of pressure today. Where we will be looking at, the market has an eye on the next 2 weeks where we're going to get a bond auction. That's going to be interesting to see what's going to happen at that level. Whether we see an increase in yields, just for federal government to show, for the DMO to show their hand that they're ready to, let rates rise, or would it be cautious in the sense that, the interest rate and the cost of funding, would it be, we need to keep it at this level? And then would marketing itself be demanded for higher yields based on whatever is happening globally and in the local markets at the time?
All right, Jubalero Phillips, head FX trading at FM Quest Merchant Bank. Thank you so much for sharing your thoughts with us, and have a great weekend. Well, the Bank of England is talking about the health of banks, noting that the top banks are no longer too big to fall. I wonder why this is coming at this time, but thank God we have Juliana there joining us from our London studios. Hi, Juliana. Good morning. Why are we having this conversation at this time?
Good morning, Innie. I think what we would have to do is cast our minds back to 2008 when the world went through a global recession, and most notably in the UK, it was banks that were really suffering. I believe the government paid out to the tune of £157 billion to save some of the biggest banks, and one of them was the Royal Bank of Scotland, which is now known as NatWest. Now, since that time, every 2 years, the Bank of England does conduct this resolution test to make sure that banks are healthy, and they've just conducted the last one, and they have come up with the conclusion that banks no longer, in this day and age, the 8 biggest high street lenders need a state bailout. So if the worst case scenario did happen and they were to fall, investors, shareholders and savers' money would be safe. So I think the headline is a little bit misleading, saying banks are, some banks are no longer too big to fail. That is seen as almost a positive thing, because of course the Bank of England doesn't have enough cash in its coffers to try and bail out banks any time that they're in trouble.
Yeah, well, and then in Wales, I think, was it last week? I did not eventually ask you if you got that grant, that energy grant, but now it seems residents in Wales are getting a little bit of buffer, additional fuel vouchers.
Yes, that's right. I haven't got that energy grant yet. I don't think anyone in the country has got it yet, Innie. It's scheduled for the first payment to come out, I believe, in August. But who's paying for this extra boost by the Welsh Government? It is, of course, the taxpayer. The Welsh Government, they've joined forces with the Fuel Foundation relief. And really, that is to help people who are struggling with the cost of living. Again, the price of petrol is hitting the headlines. It costs more than £100 to fill up an average family car. And of course, if you are heating your home or cooking, as most people in the UK are, you are seeing your bills spiral out of control. So what the Fuel Foundation, as well as the Welsh Government, have realised is that it is those who are on prepaid meters. So those are people who have a key or a card, I believe, and have to top up their gas as a pay-as-you-go style. They are suffering more. I believe there are about 120,000 of those, and there are even 2,000 people that are not on the gas meter at all. In fact, they're heating their homes with oil, really old-fashioned, but of course they need help. So this is a £4 million scheme where people will be eligible. If you fall into either of those two categories, you'll be receiving £39 in the summer months, so now. And then, of course, when we know that Ofgem are going to raise that energy cap in the autumn, they'll receive an extra £49.
And then we're talking about Brexit again, post-Brexit, more like it. I know you've tried a lot of times to explain this Northern Ireland arrangement, but we see that by Monday there's supposed to be a set of presentation of legislation to the Parliament.
That's right, yes. What I read in the Times this morning is that Boris Johnson's government are drafting and redrafting this legislation that the Foreign Secretary Liz Truss will present to lawmakers on Monday. It's all about the Northern Ireland Protocol, very, very difficult set of legislation, but it was signed into law as an international treaty by the Prime Minister in 2019. So really, it should have been closed, sealed and delivered. Unfortunately for him, by not being in the singles market and the customs union, and to prevent a border on the island of Ireland, there has essentially been a border down the Irish Sea, and that has caused lots of friction in Northern Ireland, which we know is a British-run territory, and it is leading to potential political instability. The government, the Conservative government, have agreed amongst themselves that it doesn't work, but of course we know that the international community, most notably Joe Biden, the president of the United States, and of course lawmakers in Brussels, they believe that it's just unacceptable that how at the 11th hour or past the 11th hour can Boris Johnson decide to go against an international treaty that has been signed and has been trusted. But they said that they are going to do it. They don't believe that it delivers for the Union in Northern Ireland, and they want to prevent any further trade hustle. So we are going to see what Liz Truss has to say on Monday and expect some pretty fiery commentary from Brussels and America and, of course, amongst allies across the world.
All right, Juliana, but just before we let you go, we know that Prime Minister Boris Johnson had promised, I guess this is part of the work, he had promised, well, the no vote confidence or the vote confidence is over now and he's settled down to work. How is it going in that area?
That's an interesting question, and we'll be revealing more during Channel's Business Global, which airs at 4:30 today. But of course, we know that the Prime Minister is still very much wounded. 148 of his own MPs don't believe that he's fit to run the country or run their government. He did get a victory with 56% of the vote, but is that going to be enough for some MPs? Certainly not. There are still ongoing probes, so I believe the Standards Committee are going to be looking at whether he broke the ministerial code by knowingly lying to Parliament. And also there are some pretty upset backbenchers who are trying to get Sir Graham Brady's 1922 committee to change the laws so that the Prime Minister isn't immune from another vote of confidence within a year. So we'll just have to wait and see. I think now a lot of commentators are waiting for the two by-elections which are coming up, the local elections that took place a couple of weeks ago. We know that the Conservative Party didn't do too well there, but these local elections that are coming up in the next couple of weeks are Tory strongholds. So if they do lose those seats to the Liberal Democrats, perhaps those who have been gritting their teeth accepting the Prime Minister will finally speak out against him.
All right, Juliana, thank you. Certainly an interesting line of conversation we will have to pursue in the nearest future. That election will actually be very, very interesting. Thank you so much. We'll talk to you at 1:30. And, of course, we'll be looking at that episode of Global Business, you know, where you will give us a lowdown of what's going on in that area.
Thanks, Henny.
Well, unfortunately, we do not have Ladi on the crypto space today, but we do hope that we'll have him on Monday to tell us if there's been any improvement in that space. We do know that just as a lot of markets in the world, the crypto market hasn't been looking very bright in recent times. We wish the crypto market a green weekend, and hopefully we have a green report on Monday. But that's it on the program. Thank you so much for being a part of it. It's been a very exciting and very, well, would I say, informative for me, and I guess for you also, all through the week for Business Morning. We'll do it again next week by God's grace. I'm Ini John McQuarrie, but I'll see you at 1:30 during Business Incorporated, where you have updates from the world of business.